Sir, there's a GC right there, Cliff.
Go.
It's piers. They got concrete piers and wood piers.
Yes,
Got
sir.
the checklist. Check out the checklist. We
Yes,
got it for everything we need.
Yes, sir.
Right, you forget some things sometimes. So this is going to outline, make sure you hit every single thing. What's the foundation, plumbing, electric, painting, flooring, everything. So you don't miss anything.
Okay.
You want to make sure you get all your checks.
Okay. I want to introduce you guys to Cliff Hunter. Cliff is a world-renowned flipper. He actually flips. He's also a GC as well. He's a good contractor. When it comes to all of our renovations, all over the nation, you'll talk to this guy right here.
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, baby? It's your partner Cliff and Dale back in the saddle again for another edition of Real Estate Friday training, man, on a Friday at a little bit late, 5:30 p.m. It's all good, baby. We will take care of business. Cliff, how you doing, big time? How was week, brother? What's going on with you, man?
Man, it's been a good week. Man, busy, real busy. But man, can't complain. It's been a good week. Happy to see my Mavericks. We're still in the playoffs. We're about to win this next one.
Yes, sir.
But it's been good, man. I can't complain. I'm blessed.
Yeah, so did we get the bag?
Oh man, got the bag.
Got the bag,
Got that
baby. Yes, sir. We got a nice bag coming on a couple props. Am I right, big dog?
Yeah, man. Fine, man. Been working hard, grinding on a couple of deals.
Yeah.
But we're about to see
Yeah.
the fruits of our labor, so it's
Yeah.
finally gonna come through, man. It's
It's gonna
a
come
long
through.
time coming, but I'm happy to see it come through.
Yes, sir, baby, man. This is building a business is not easy, guys. When you have different visions, things of that nature, you have execution. We have dealing with different people, GCs, appraisals, lenders, banks, things of that nature. It's different, guys. So at the exact same time, that's just what you got to do. But it is what it is, guys. Let's dive into this thing real fast, y'all. Man, let's dive into the current market analysis. Cliff, big dog, what you seeing, brother, in the market? How did people?
Right now, I'm seeing basically, I'm in the DFW market, Dallas Fort Worth, man. What I'm seeing is, same thing as last week. It's still stagnant a little bit, raising up a little bit. What I'm mainly seeing is
Yeah.
don't taking advantage with the taxes.
Yeah.
I'm seeing crazy adjustments with taxes. Because the market has gone up the last several years.
Yeah.
What's happened is the taxes have substantially gone up as well. Even though the market has come down a little bit and
Okay.
it's gone a little sideways, the
Yeah.
taxes did not come down or go sideways. They continue to go up.
Oh wow. Okay.
So for the first time that I've seen in my career, I've seen taxes that are higher than what the actual value of the property is consistently.
Wow. That's actually about right. That's what you call inflation, right?
Yeah.
Called inflation. That stealth tax. Again, guys, we try to tell you all the time. There's a tax that most investors do not prepare for. That is inflation because you can't see it. It's baked in the cake, depending on the policy itself. So what me and Cliff kind of do to kind of curtail that is we become more aggressive negotiators up front so that we don't pass that cost on to our consumer because the consumer is bringing the bag. We want to pass it on really to the seller so we become more hawkish when it comes to negotiating. You agree, Cliff?
Exactly. Yeah. I mean, it's the conditions of the
Yeah,
situation. You know what I
yeah,
mean? It's always going to be
yeah.
different. You got to adjust.
Gotta adjust, guys. You gotta adjust, man. So, are you still seeing the same moment from $350,000 and low, still pretty hot, or it's cooled off a little bit?
Oh no, that's hot.
That's fine.
Especially in Dallas. If you can get some certain features in the property,
Mhm.
they moving. I'm still seeing those. I think I saw a lot of townhomes are falling into that. I'm
Yes,
seeing a lot of townhomes. That's how they're able to make that cost effective. It's still a nice home, 1,800 square feet,
it is. It is.
and they're able to make it at a price point. I'm seeing a lot of townhomes sell for that price point.
And there's a builder actually building smaller homes, right? And then
Yeah.
selling them for like 250,000, 275,000, 300 grand. And they just liquidated them over and over and over again because it's at the bottom of the market. So paying a 6-7% interest rate didn't really hurt people at all because the price point is too low. You agree, Cliff?
Yeah, I looked at a video that was in Houston. I saw prices down to 135, $140,000. Now these are
Ooh.
small structures.
Yeah.
I'm talking about 1,300 square feet. You know what I mean?
Yeah,
1,200 square feet. Very small, but it gets your foot in the door,
it does.
right?
It does. It does.
And
It
it's
does.
better than renting. You actually own something.
Yeah.
So yeah, I'm seeing some people get creative because of the market that we're in.
Correct. I agree with 100%. Now, let's say 400,000 and above. How many days on market?
Right
Is that
now,
400,000?
60, 70.
67. Okay, 400,000 to 800,000.
400,000 to 800,000.
Yeah. Days
90,
on market.
90,
90 days.
100.
Woo, that's a long time. Okay, 800,000, 850 and above.
850 and above, easily over 120. About 120. Took me about 4 months. Yeah.
4 months to sell. That's a long time to wait, y'all. And that's best case scenario. That's best. That ain't the worst. I've seen properties on the market for 12 plus months and not sell at that price point, guys. Again, 400,000 above, you kind of get a little bit riskier in today's climate because the cost of capital for the end buyer is too great. Someone paying 7% interest rate, and some of these borrowers are self-employed individuals, so they're having to get a bank statement loan. They had to put down 10%, and then their rate is really about 9%. So that's crazy town. You agree, Cliff?
Yeah. It's it's hard to make that work. I mean, you're talking basically from where we were about 5 years ago.
Yeah,
The average mortgage is anywhere from about $600 to $1,000 more per month,
agree.
just from the
Agree.
interest rates. So that's
That's
where we at.
that's crazy, guys. So again, guys, whenever you're negotiating real estate transactions, make sure that you are negotiating or be more of a hawk on negotiating, right? So that you don't pass that cost on to your end buyer or to your tenant or to the consumer. You actually become more aggressive in negotiating, and you absorb that by getting a lesser purchase price. That's what I would kind of do, guys. It worked well for us. Now, Cliff, brother, Biden's top economist in the fire debate on the economy, he went on Fox Business. It was one of the most interesting exchanges that I actually saw concerning inflation and the taxes. I thought it would be wise for us to kind of look at this cliff, for the cliff to really see what actually happened. And guys, man, when you see this, man, this right here really was interesting, this exchange. And me and Cliff will give our commentary on the difference in vision, so to speak, because you have Neil Cavuto communicating one vision, then you also have Biden's top economist communicating another vision. Let's dive this real fast. Here we go. Here we go.
Speaking of the White House, honored to have my next guest, the chairman of the Council of Economic Advisors, Jared Bernstein. You know, Jared, I understand your frustration sometimes when you look at the data and Americans don't buy the data, but they really don't buy the president telling them that they're essentially wrong. It's not that bad. So how do you navigate that?
Well, that's not at all what the president tells them. And in fact, yesterday, if you look at his statement, which is on the White House website, on the inflation report, we got a very favorable report from the perspective of the markets today, as you have been reporting correctly. But he pointed out, I think one of his first sentences is, we know families are still struggling with prices that are too high. I mean, this is practically a quote from his statement yesterday. Never will this president blow off the struggles that families like the one he grew up in are going through. Instead, he'll take action to help them through cutting costs, prescription drug, clean energy, housing, childcare, junk fees. actively working to lower costs in those areas. So not at all dismissive of America's concerns in that regard, Neil.
All right, well, some might disagree with you on that, but I do want to get behind why the president keeps claiming this. This is what talking about inflation. Take a look.
We have dramatically reduced inflation from 9% down to close to 3%. We're in a situation where we're better situated than we were when we took office. It was 9% when I came to office. 9%. But look, people have a right to be concerned. I think inflation has gone slightly up. It was at 9% when I came in, and it's now down around 3%.
Jared, why does he keep saying that? You're his top you're the head of the Council of Economic Advisors. Do you ever whisper in his ear, Mr. President, just to be technical about it, it was at 9% when you assumed office. It was 1.4%. It got as high as 9% in 2022. You brought it down from that, but it was never, ever, ever 9% when you came into office. So why does he keep saying it?
Well, first of all, let me point out that in that very quote you played, the president talked about how concerned he was for households struggling with prices that he consistently characterizes as too high.
That's not what I asked you.
So
why does he keep misrepresenting this?
He's making the point that the factors that caused inflation to climb to 9% were in place when he took office.
No,
I think
that's
it was
not what he said. He said it was at 9%. It would eventually get...
Cliff, now we're hearing his top economists say, first, Neil Cavuto, which I think was wise, came and said he said that he came into office and the inflation rate was 9%. Neil then came and said, no, it was actually 1.4%. Then what actually happened is you saw Biden's economists look down a little bit, and it sounded like he looked like he's reading something. He was saying the factors were already in place when Biden got into office to drive to 9%. What? How? Am I tripping now? What you think about that?
Yeah, I think he's right. The factors that cause inflation were in place.
Well, no. What he's saying is there was factors in place that before Biden got into office, that caused for it to go up. And I'm like, no, because when you got in, it was 1.4, and we were coming out of COVID. So you can't blame COVID. No, we're coming out of COVID, right? So you came in at 1.4%, and this was at the 24-month calculation, not 12, when they changed in 2022. Right. 24 months. Now, this guy comes out and says that, well, the factors were in place before he got into office that drove up to 9%. And I'm like, you on some bull. Will you agree or you disagree?
No, I agree. I disagree. But what I'm saying is, what year did Biden come in?
2021.
Right? January.
Yes. He got sworn in.
So I'm looking at it. I'm looking through it right now.
Okay.
It was 1.4.
Correct.
Then it went 1.7, 2.6, 4.2, 5.0, 5.4. And it's been going up. It basically just kept going up. So it hit about 9, and then then they changed the way they calculate
calculation. Yep. Sure did. And Cliff, you know that they just, before the CPI came out, the Bureau of Labor and Statistics just changed the calculations. They're now taking out coffee out of the PPI. They're taking it out because of the fact that a large amount of Americans, 73% of Americans, actually drink a large sum of coffee, and coffees went up in cost, so they took it out, so it won't show a higher cost.
Yeah. The truth is that the inflation rate is much higher than what they're saying it is.
Correct.
And they don't want to tell everybody the truth, which is we need to keep rates higher for about 4 or 5 years before we cut. And they don't want to tell people that, and they want to artificially manipulate it so they can say, it looks better, cut.
Exactly. Let's keep going, Cliff, because Neil really goes in on this. He really goes in, and then Neil begins to present data like you just did. All right, here we go.
Get to 9% a little over a year after that. But the fact of the matter is it wasn't 9%. So if I can't trust him quoting data in real time, why should I believe what he's talking about now?
So the annual growth in core inflation in the second quarter of 21 was in fact about 9%. And his point about inflation down 60% off its peak is very much the case. So
no,
look,
it wasn't. It was not. It was not at that. So you're almost as bad as he is. Why can't you just say it was high? It got as high as 9%. You'd be accurate in saying that. Correct. And we have now brought it down, and we're struggling in around the 3% area. But it's better than it was. But instead, to hang it on his predecessor, that you inherited something that was through the roof when we were in the middle of COVID. It just seems to the American people, whether you're Republican or Democrat, you're lying. Neil. You're just lying.
Well, hold on. I hear you,
Cliff. He just said he's lying. I have not heard a journalist come on and say, "Man, you lying, bro. You got some bull." And he shows them the chart, like, look, what you just described is what Neil just showed. So, Cliff, you're spot on. This guy is just lying. Just lying.
He's trying to make it look good. I mean, he's trying to spin. That's what he's trying to do. He's trying to spin.
I told y'all, man, we almost done, guys. And then the same guy you're gonna see in a second how he thinks. We almost done. Here we go.
I hear you. The president was making the point that I think is unequivocally true. The factors that took inflation to 9% were in place when he took office.
That is not what he said, Jared. And you're a very smart guy with this stuff. You could just whisper, and he's a good friend of yours. Obviously, thinks the world of you. Many others do as well. Yeah. You could have just told him, Chief, I got to tell you, Mr. President, whatever you say, you might even, in fact, call him Joe. That's how close you are. And look, say, sir, it was not 9%. Stop it with the 9%, because the more you say that, the more people don't believe what you're saying.
We lying.
Look, I think what the American people care most about is the fact
truth.
that inflation.
The American people care about truth, Jared.
Hold on, Neil. Neil, this only works if you let me talk, okay?
You haven't answered my question. I've asked it 5 times, five ways.
The president was making the point that the factors that caused inflation were in place when he took office, and that's unequivocally true. Right. I take your point, and we can have we can go on all day back and forth on this. I think what matters today is, are we making progress on lowering costs as well as lowering inflation? You know, they're not the same thing. Lowering both inflation and costs on behalf of the American people. I think we saw a great CPI report yesterday in that regard, but that's just one data point. No victory.
CPI, some of my guys is CPI that we just talked about concerning them taking out coffee. Let's keep going.
Relapse, no getting too far over the skis there. So you think the trend is your friend,
and other economists agree with you that it looks like it could be, and the Federal Reserve might have some flexibility to cut rates. Correct. I had a guest on, you might have heard earlier, Jared, who was saying that would be a mistake. It would be a little too soon.
All right, yeah, I'm tired of that. I'm tired of that, man. I mean, the bullshit is just on full display. Cliff, what you think? Now, holler at your partner, man.
Yeah, I'm doing a little bit of research here, man. Taking a look at what he's saying, right? Because he's saying the factors were already in place, right?
That's what he said. That's what he said.
And I'm saying that's not. I can prove it's not accurate.
Ooh.
January 1st. We're gonna real quick, right? January 1.4.
Share your screen. Share your screen. Share your screen. We need to see we need the folks to see this. Folks to see this. Share your screen. Yeah, share your screen. Yes, sir. Share. Yes, sir. I got you, baby. Let me see. I got you here. Boom. There we go. Can we see it? I'm gonna move down a little bit lower. Can y'all see it better? Is that better? Okay, keep going, Cliff.
So he's talking about here, right? That's when Biden came into office, right?
For sure.
1.4. Then it went to 1.7.
Yep. What's up?
0.6.
Yeah.
Now, if you look historically, what's the highest it really got? Maybe 3.9 down here. So maybe about 4%. That's the highest, right?
Okay. I got you.
So really about 4 or even 5 here is not crazy.
Okay.
These ones are not crazy. It can lower pretty quickly from there.
So,
but from there, it continues to rise and it keeps going. So the question is, something happened from 2.6 for it to double.
Yes.
To 5.4 this quickly. It doubled. This one, like, it's been going up, but it was steady, went crazy, had dropped a little. Something happened here that caused it to go up and double from this to this, and then double from this to this.
Correct.
Now, when was the American Rescue Plan
Passed.
Passed. Do you know when it was, Dale? Do you
I
know when
think
it
it
was
was
passed?
early 2022. Am I wrong? Am I off? Early
So you're saying
2022.
it was here.
I believe so. I may be wrong. Let me check. Go ahead.
You're wrong.
When was it passed?
March 2021.
Oh, so it was.
Now, are you
Oh,
seeing a coincidence? Maybe it's a coincidence, right?
whoa.
Maybe.
Okay.
What I'm
Okay.
saying is $1.9 trillion was spent here. 2.6,
Damn.
nothing crazy, right? 1.7, it had
Yeah.
been a little bit higher.
Yeah.
Maybe even 5 at the highest is kind of, but immediately,
Wow. So what you're saying is the printing that Biden did when he got in the office caused the spike. Am I right?
yep, it happened right here. And what happened immediately? It almost doubled.
Double. Man, come on, y'all. Come on, y'all. Man.
Because the money was we already had trillions floating in the economy. And then you passed, what was the exact amount? $1.9 trillion in the economy stimulus bill,
Wow.
or economic stimulus bill,
That's crazy, man.
March 2021.
That's crazy, bro. That is crazy, man. That so again, lying again. There was nothing in place that caused this when he got into office caused this. His actions caused the spike. And then when they
Look at
saw it, go ahead.
oh no, I was just
Go
saying,
ahead.
like, because 5 is the highest it had ever been.
Correct.
If you could find it somewhere on here, when's the last time it was 5?
Man,
2008.
yeah, yep. And what happened then?
Right.
What happened then? It was the bailout plan. They had to print some more money. You see how
Boom.
that works? Yes,
Boom.
sir. Yes, sir. More printing caused it. Yes, sir. Doc. Hey, man. Hey, y'all. For real. Hey, man. We ain't playing. We're not trying to. We're not trying to lead you guys in the wrong direction. We're just keeping it 1,000 with you cats. That's it.
But that proves it. That is, what are the odds that the month you signed it, 3 months later, it doubles?
Correct. Correct. Now, Cliff, man, let's dive into this real fast. Before I go there, guys. Now, so now we saw that fire debate. It goes on for 13 minutes. 13 minutes. Neil destroys them on straight facts over and over and over and over again. If you don't want to know what it is, guys, hey, just look up Biden's top economist fire debate with Neil Cavuto. That's it, and you got it. Now, guys, you may say, how can someone get on TV and just straight up lie that way? Let me tell you how. Let me tell you how, guys. Here we go. Boom. Let's actually listen to the same economic. He's the chief, the top economist in the Biden administration. The same guy. Let's listen to his thought process concerning debt. Listen to it, and you'll see why we're in some foolishness. Here we go. Let's get to it.
Government even borrow?
Well, again, some of this stuff gets, some of the language some of the language and concepts are just confusing. I mean, the government definitely prints money, and it definitely lends that money, which is why the government definitely prints money, and then it lends that money by selling bonds. Is that what they do?
Come on, y'all.
They sell bonds. They sell bonds, right? Because they sell bonds and people buy the bonds and lend them the money. Yeah. So a lot of times, at least to my ear with MMT, the language and the concepts can be kind of unnecessarily confusing, but there is no question that the government prints money and then it uses that money to
wow.
Yeah, I guess I can't really talk. I don't get it. I don't know what they're talking about. Like, because it's like the government clearly prints money. It does it all the time, and it clearly borrows. Otherwise, we wouldn't be having this debt and deficit conversation. So, I don't think there's anything confusing there.
That is the chief. Cliff, you said better than I can. Go ahead. You go ahead and say it, bro.
No, I mean, it does bring up a good question though. Why does the government borrow?
Go a little deeper with that question, Doc. What you mean? Why do they borrow?
Well, so at the end of the day, basically, the Treasury create a bond, and the Fed will buy that bond, giving the Treasury capital. Why? But the Fed don't have money. The Fed's just making it up. So they're making up money. The government says we need to borrow. We need $1 trillion, and they just go, we need someone to buy this bond, and the Fed's like, here you go. But the Fed's broke. The Fed ain't got no money.
So Cliff, let me go ahead.
Why are we going into debt? Why? It's not really debt. It's just, and then people are buying those bonds from the Fed because they sell them to the banks and stuff, and the banks will buy, and the banks buy that fictitious money with fake money too, because they got fake money. So what it does bring up the question: why do we sell bonds at all? Why not just inflate? What's the point of bonds? If you could print your own money, what's the point of the Fed? And what's the point of the Treasury? You just combine them and just print, and there is no debt. It's just pure inflation.
Okay, Cliff. Okay, I'm glad you asked that question. Let's go into, guys, how you asked the question, and I got to add this in here. How does the government? What's the question you asked? Why does the government print, or how does the government print? Why?
No. Why does the government borrow?
Okay, government borrow. Okay, guys, I'm adding a question on here in mid-show, and we're going to answer that question right now, guys. You guys, I hope you guys are ready for this answer, because it may shock you guys. Let's look at, why does the government borrow? Let's look at the entire system. Y'all cool with that? Y'all cool with that? Let's see what's going on, Cliff. Let me share this real quickly, guys, and we're going to walk through why they actually share. Here we go. Boom. Let's listen to this, guys. Here we go. Let's see. Here we go.
The way the system works is that, step 1, the government creates glorified IOUs. These bonds increase our national debt and put the public on the hook to pay it back. Step 2, IOUs are swapped to create currency. The Treasury sells the bonds to the banks. The banks then turn around and sell our national debt at a profit to the Federal Reserve, which they probably own. The Federal Reserve then opens its checkbook that doesn't have a penny in it and buys those IOUs with IOUs that it writes, checks, on a checking account that has a zero balance. Then they give those checks to the banks, and currency just springs into existence, and then the whole process repeats. This results in a buildup of bonds at the Federal Reserve and currency at the Treasury, which is really just a supply of numbers. The Treasury then deposits the numbers in the various branches of the government, and we get to step 3. The government spends the numbers on promises, public works, social programs, and war. Then the government employees, contractors, and soldiers deposit their pay into the banks, and we get to step 4, where the banks multiply the numbers by magically inventing more IOUs through fractional reserve lending, where they steal a portion of everyone's deposit and lend it out. That currency gets redeposited, and then a portion is stolen again, and the process repeats over and over, magnifying the currency supply exponentially. Then we work for some of those numbers, which brings us to step 5, where our numbers are taxed. We pay tax to the IRS, who then turns our numbers over to the Treasury, so the Treasury can pay the principal plus the interest on bonds that were purchased by the Federal Reserve with a check from nothing. Then we get to step 6, the debt ceiling delusion. The system is designed to require ever-increasing levels of debt and will eventually collapse under its own weight because politicians always kick the can down the road. They don't want it to collapse on their watch. And finally, step 7, the secret owners take their cut. The world's largest banks own the Federal Reserve. Those banks make a profit selling our national debt to the Fed. They make a profit when the Fed pays them interest on the reserves held at the Fed. And the Fed pays them a 6% dividend on their ownership of the Fed. This system is fundamentally evil. It funnels wealth from the working population to the government and the banking sector. It is the cause of the artificial booms and busts of modern economies, and it causes great disparity of wealth between the rich and the working class.
Cliff, what do you think, Doc, about that whole breakdown, bro?
Well, basically, the ownership of the banks, basically, the ownership of the Fed is the banks.
Mm-hmm.
They're catching both. They're getting paid by the Fed
Correct.
for the bonds. Then they're getting paid again when those funds are deposited into their own account.
Correct.
So basically, the banks own the system, basically.
Exactly.
But the question is, so it still goes back to why are we borrowing? It makes no sense. It seems like all that is convoluted to say we give money to the banks so the banks can make money.
Correct.
But if we just cut all of them out, the Treasury could just print money, and then the government could just operate.
Correct. I agree with that. Now, how did you get to that question, Cliff? What prompts you to ask that question?
Bringing up the what that guy was saying, right? He was like, clearly we print money, we know that. We create bonds, and that creates our national debt. But you're sitting there going, if we're printing the money, why is there debt?
Mm-hmm.
You know what I'm saying? If I'm printing the money, why do I owe somebody for money I created from nothing?
Mm-hmm.
Who do I owe for? So I have to pay for the right to create my own money?
Mm-hmm. Correct.
That makes no sense.
Yeah, I'm rocking with you. So the question that you're really asking is, you're saying, okay, LaDale, here's my question: is if all we do is just raise the debt ceiling to pay our bills, why do we borrow for? So what's what you're asking?
Well, why is there a debt ceiling at all? Why is there debt at all?
Yeah.
Who do we owe the money to?
Yeah. Well,
you see what I'm saying?
We owe the money to nobody. It's made up.
It's accounting for the amount of money we've printed, but we don't actually owe it to anybody. We owe it to the people who bought the bonds.
Mm-hmm. Mm-hmm. Yes.
Right.
Yes.
But
yes,
you could print money and buy the bonds back.
Correct.
So
correct.
It almost seems like, if you think about it, bonds are really for the rich, because if you have $10 million and you're getting 5%, right?
Yeah.
If you get $10 million, right, and you get 5%, that's $500,000 a year doing nothing.
Yes.
That's. But if you think about it, that $500,000 of payment that you're getting is payment that's generated from taxes to pay the interest on the debt. Why? Why are we paying out interest to rich people who bought bonds from a made-up currency where there is no debt? Makes no sense.
It doesn't make sense, Cliff, because, put it like this. Let me ask you this question. Why does the government charge us taxes if all we do is raise the debt ceiling to pay our bills? It's the exact.
We're spending more than tax revenue.
But where's that tax revenue going to? Because it's not going toward paying down the debt. Where's it going?
I see what you're saying.
Where's it going?
So you're saying, let's say the national debt is 30 trillion.
Yes.
Tax revenue, I'm throwing out a number, 5 trillion.
Okay.
So it should go down to 25, right? From 30 to 25. Sure. And then if we spend too much, let's say an extra 2 trillion, it should go to 27 trillion. But it should still come down. It's not. it just keeps going up. So the revenue is being taken
Yes.
and not utilized. It's not paying
Yes.
down any
Yes.
debt.
Yes.
Because
Yes.
if you're,
Yes.
because if you're,
Yes.
so it should be a 2. Man, okay, this is it's
Uh, here is you are beginning to see a situation right now to where is if I bring up the debt clock right now, I'm gonna bring it up real fast. I'm gonna say
I see because
U.S.
you're paying down 5, but you're spending 7, so it goes from 30 to 32, which causes the deficit to go up.
No, hold on. I don't think you understand what's going. Hold on 1 second. I'm going to show you. Oh, what happened? They gonna let me do it? Oh, my bad. All right, Cliff. Here is the debt clock. I want you to see this real fast. I want everybody to walk through. Now, guys, we're going into our bag a little bit. We should be charging you guys for this because we really going into the bag on this one, guys. But anyway, it is what it is. It's all good. We love you, baby. Here is the debt clock, Cliff. I'm gonna make it bigger for everybody so everybody can see. All right. All right. I'm gonna get rid of this icon real fast. If you can see right here, Cliff, it says our debt is 34 trillion plus, right?
Mm-hmm.
You see that, right? So it says U.S. debt, U.S. federal tax revenue right here, right? Right, this was it right there. It says 4.8 trillion. Why is this not being applied to this? Are you sure what I'm saying?
Well, I think it could be. It's. I guess you're saying it's reserves.
But here, reserves for whom? Because of the fact that this is tax revenue. Shouldn't tax revenue go to paying our bills? We're collecting 4.8 trillion in tax revenue. The debt is still going up. It's going up, Cliff. It's going up.
Well, to
You said
me,
5, and then 6, and the revenue is going up.
well,
It's going up.
You should be buying back bonds. You should be that money should be spent buying back bonds because you're paying 6% on that debt. Why pay 6% on it if you can spend 4 trillion and buy down that interest payment?
I'm rocking with you, Cliff, but here's what I think. Here's what I want you to see real quickly here as we come up on the screen. I'm hearing what you're saying, Cliff, but we're not using this tax revenue right here, right, to buy down this debt at all or to buy bonds. No, we're not. We're just raising the debt ceiling. That's all we're doing. We just saw that in that video and hitting some money. They just raised the debt ceiling. That's all they did.
So you're saying let's say every year the U.S. brings in, let's say, 5 trillion, right? So next year it'll bring in 5 trillion.
Yeah.
The year after that, okay. So there should be, if we're not spending any of that cash, there should be all the revenue from every year in U.S. existence in that.
Correct, and none of this is going. Just look up. I'll look up real fast. While that's up, I'll look up. I'm
That'll
saying
sound right.
U.S. debt, U.S. rising debt over the years. Over the years. All right, here we go. We're gonna look up the debt now, guys. We're gonna look up the debt. What's the government? The government debt. Okay, this is America. Open up. Let's see. Where's the chart at? Chart. I need a chart. Look up the government debt over the years, national debt chart. Here we go. Boom. Here we go. Okay, where's the chart at? Okay, here's somewhat of a chart. Okay, we're actually here. Okay, here's. I don't like that chart is kind of iffy. I want something a little bit more robust. That's the debt clock. No, they ain't gonna give it to me. Ain't gonna give it to me at all. All I'm saying is, Cliff, is we are collecting all this money in taxes right now, and none of that money is going toward paying down the debt. Because all we're doing to pay our bills, Cliff, is not taking that tax revenue and putting toward even the bills or even toward the debt. So even when it comes to paying the bills or paying out the debt, none of that tax revenue is going toward any of that or those areas at all. So where is the money going to?
So okay. So the cash, you're basically saying the cash that we get, let's say it's 5 trillion.
Okay.
The United States is bringing in 5 trillion in revenue.
Yes.
And we're parking it. We're burning that money. We're not using or spending a dime of that. It's just parked in an account.
We don't, Cliff, what I'm saying is we don't know because of the fact that all we're doing to pay our bills is just raising the debt. We're raising the debt ceiling. That's all we're doing. So we're not using tax revenue to pay any of the bills, number one, or to pay down the debt, number two. Where is that money going to?
Huh?
Where is it going?
Yeah, I see what you're saying. I don't want, because if we're bringing in revenue and then not spending any of that revenue, then yeah,
where is the money going?
So you're saying we bring in tax revenue and don't spend it?
Cliff, what I'm saying is this here: if we're following this debt clock, look at the clock. It's saying right now, it's saying right now, Cliff, it's saying we have 4.83 trillion in tax revenue. Look at the debt, U.S. debt, and then look at the U.S. debt revenue. I mean, tax revenue. They're both going up. So if we're taking this revenue in, why is it still going up? Why is it still going up?
Because we're spending more than we're receiving.
I got you. Okay, cool. I got the reason. Okay, no problem. So if that's the case, we should be taking the tax revenue and paying our bills, right?
Yeah, that's what I thought. See, that's what I thought. I thought we brought in $5 trillion. We spent that to run the government, and anything we didn't have, we raised the debt to use that capital.
No, what's actually happening, Cliff, is we don't use that revenue to actually pay any of the bills. We just raise the debt ceiling every time. Remember, if you go back and look at any discussion, whether it be a Democrat or Republican type of comments, that they keep saying we got to raise debt ceiling. Why? We got to pay our bills. And I'm not pay your bills. What do you mean? We got revenue coming in. Like, pay the bills. Pay the bills. They keep saying, well, the interest on the debt is the exact same amount. It's $1.4 trillion. I mean, my God, it's the exact same amount that we pay on defense. Okay, no problem. Okay, but then when you raise the debt ceiling, you say now we can give money to the defense. Now, wait a minute. What happened to all this money? Well, what happened? What happened to all of this tax revenue? What happened? Where did it go? Where's this money going? It's not going for the debt. Ain't going to pay the bills because you raised the debt ceiling to pay the bills. Where is this money going? Where is it? Now, Cliff, watch this. Watch this. You think I'm tripping? Watch this, bro. Watch this, man. Here is a chart talking about. It's a chart talking about. Let's make it bigger for the people in the back row. Look at this, Cliff. This is from 1990. Oh, look at this. It's going up. Look at this, man. This is the debt. Why?
That can't be right.
Cliff, why is the debt still growing and we're collecting all this money, and when it comes to paying our bills, we just raise the debt ceiling? Why?
Because we're not. So from what I could see, that it couldn't be that way. Where we have to be spending the cash, because if we were bringing in $5 trillion in revenue,
okay,
and let's say to run the government is $7 trillion,
correct,
the national debt would go up $7 trillion if we weren't spending that cash. But since we are spending the cash, it only goes up $2 trillion.
So here's my question: if what you're saying is correct, why do we have to raise the debt ceiling to pay the bills? Shouldn't we just use the tax revenue to pay the bills?
No, because the amount of money we're spending is more than the revenue we're bringing in. So then we have to raise the debt ceiling for that difference.
But here's the thing about it is they say, wait a minute, we got to raise the debt ceiling up, let's say $10 trillion. And they're saying if we don't raise the debt ceiling up, we can't pay our bills. And so I'm saying, okay, I'm hearing what you're saying. I'm rocking with you, but we collected $5 trillion in tax revenue. Where is that money going?
It has to be. I was thinking the same thing, but it has to be being utilized. It has to be, because
where
to run the government.
But if that's the case, Why are you telling me that we have to raise the debt ceiling to pay the bills?
So it's like this. We got a business, we got $10,000 on a credit card, right? So to run the business is going to cost us 12.
Okay.
So we bring in $10,000 in revenue.
Okay.
Cool. That can take care of 10,000. Cool.
Okay.
We still have $2,000 to pay. We don't have it. We had a $10,000. That was our limit, 10, right?
Okay.
But we need to spend 12. We brought in $10,000 worth of revenue. Cool.
Okay.
We were able to pay down the card, but now we have 2,000 extra. We have to raise the credit limit of that card to spend 12.
So what you're saying is this here. I'm gonna give you an example. You're saying, okay, the president comes out with a budget. President Biden just said we have a $7 trillion budget for 2025. Hypothetically, okay? 2025, $7 trillion budget. And the budgets keep going up. The budgets keep going up. And so I'm saying, okay, wait a minute. wait a minute. If the budget keeps going up, wouldn't it make sense, guys, for us to adjust the budget? To where we say, okay, guys, we're getting really out of control here. We got to really curtail this budget a little bit, guys, because of the fact that we're spending more than we actually have. But if what you're saying is correct, they won't stop spending. So if what you're saying is correct, fiscally, we should say, guys, we got to stop spending this money. But they said, hell no, we want to spend more money. But wait a minute. Hold on. We already don't have enough in revenue coming in to pay for the bills. We got to keep on raising the debt ceiling over and over and over again to pay the bills. When do we begin to take away the spending in other areas, trim the fat of what we don't need, so that we get under the threshold? That's never done. That's why I say, is this $5 trillion in revenue really going toward the bills, or is it going somewhere else? Because the shit don't make no sense.
Yeah, it's we're spending more than we're bringing in. So you have to. So right now, like our limit right now is 34 trillion, right?
Yeah.
But what's our credit limit? 35 trillion. Cool. But if it's at 35 trillion and we have $5 trillion here, cool. But we spend 7. Okay, cool. We can spend the 5 trillion. We have that cash.
Okay.
But we don't have any more money to spend the extra 2 to 3 we need because we're capped at 35 trillion. We need to raise that to 37 trillion. Now we can spend that debt.
Gotcha. So I'll take you at your word at that. Now what happens is we have that new fact. Here's my question. If you know that you don't have enough in the previous cycle to pay the bills, why would you continue the same spending habits and increase it, knowing this fact?
No, you can't. At some point, you have to go into a budget surplus so you can start paying down that debt.
This is why I'm saying I'm crying bullshit when it comes to this money going toward that, because of the fact that they keep going back and spending more money. More money. So in session number 1, you said we didn't have enough money, so we have to raise the credit card limit, the debt center, the debt limit. Okay, no problem, cool. It's been raised. And then cycle number 2 comes on. We know that we asked you before that we can't raise the debt ceiling no more. We shouldn't do that at all because we're spending too much, but we need to raise it again. So you don't make no changes at print at spending?
Yeah, I think they even talked about it. You have to pass a law that the government can only spend 90 cents on the dollar of revenue we bring in. Or something, or 100%. You can't spend more than you have. And you know what's going to happen though is they're going to say, even if you pass a bill like that, they'll say, okay, you can only spend what you bring in. That's it. That's all you can spend, unless there's an emergency.
Bro,
and they're going to be like, there's always an emergency.
Bro. I this is my opinion. I may be wrong, and I hope I'm wrong. That money ain't going toward paying the bills, my nigga. That money going somewhere else. Where? I do not know. I don't know. I have no clue. But man, this don't make no sense, because if it was truly going toward the bills, you would stop printing so much money. You will stop doing it.
But they can't. But the person who decides who to spend is the president.
Well, actually, no. It's actually not the president. It's the president in accordance with Congress, really the House, because the House has the power of the purse.
Right. Exactly. But if you want all these programs,
yeah, exactly. And so what's happened, guys, is went through the exercise to let you guys know is it's baked in the cake. They can't stop printing. They can't. That's why I believe this $5 trillion that you're seeing on this, it's really 4.8, but I'm gonna round up to 5 trillion that you see on the screen. It won't change at all because they don't want it to change. They're gonna continue to spend upon spend upon spend, and they're gonna continue to raise debt ceiling over and over and over again. Why? Because that's the game. We're in a debtor nation. If they stop printing, go ahead.
Well, I'm looking at the number. You see here, the interest on the debt is 830 billion. That's per year. 830 billion we're spending per year. Why are we spending that?
Cliff, right here, it says revenue to GDP ratio 229.70%. That is terrible equity. Terrible equity. Spending ratio 37.39. Terrible equity. Horrid. Look at this. Look at this, man. We're spending 1.7 trillion on Medicare and Medicaid. Social Security 1.4 trillion. Defense $889 billion. This is ridiculous. And all they're doing, guys, is now get this, Cliff. They're saying the interest on the U.S. total interest paid right now is 4.5 trillion. They said they're collecting 4.8 trillion in tax revenue. So that's the case. You're bringing in more revenue than the interest. Shouldn't that money be going towards something? Shouldn't it? Am I tripping? I'm just reading the facts, data, numbers. Look at the assets, small business assets, 17 trillion. Corporate assets, 23 trillion. Household assets, 163 trillion. Yeah, that's a trillion. Total U.S. national assets, $205 trillion. These dudes is leveraging their balance sheet. That's all they're doing. It's all they're doing. They are depositing this money in some account as cash reserves is building up, raising the debt ceiling, guys, over and over again. That's the credit card for the nation to pay their bills because they're leaning upon these assets here. And the problem with these assets is this asset and this asset and this asset, they're struggling. Household assets are struggling. That's why they have those incentives in place for you to go out and buy new homes. They're struggling. Corporate assets struggling. Why? You have Biden looking at actually raising the capital gains and corporate tax. Struggling. COVID destroyed so many small business struggling. We in some trouble. We're in some trouble, y'all. These three main assets are struggling. We're in some trouble. This is wow. All right, y'all. Y'all. My bad. We went to a different way because it's.
So what would you do? What would you do right now? You gotta bring this in line. You gotta make cuts. And I know I'm putting you on the spot quick, but I'm talking about 2-3 things you do immediately to try to bring this in line. What you doing?
Drill, baby, drill. You actually have a lot of countries right now that are Germany. Germany was actually buying their oil from Russia. You know, the whole thing with the whole Russia thing that imploded, right? What I would typically do is I would actually begin to drill, baby, drill, because Texas is swimming in petroleum. So, which is natural gas. So is Alaska, right? And so is North Dakota. They're swimming in it. I would begin to monetize that type of that asset for America and begin to sell those to those countries that actually need it. Israel, Germany, Mexico, Canada. Canada was upset when the Keystone Pipeline was chopped in half. When it was stopped, they were pissed. Because why? There was a revenue for them as well. Also, there was a source of revenue for them as well. So I would monetize our whole oil reserve because we're swimming in oil and natural gas. We're swimming in it. Number two, you know who's in trouble right now in the UK in Europe? Britain. I would negotiate to buy their debt pennies on the dollar. I would use my assets and oil to leverage that, so to speak. And I think the American people will be okay with that. Use that, right? Buy their debt pennies on the dollar and force them to say, before you do any additional purchase, you have to pay interest on our debt that we gave to you. So now I'm expanding my reach by buying Great Britain's debt because they need it. And I know I have gold, which is liquid gold, which is oil and natural gas. That's what I would do. I would cut taxes right on the spot because I have to get those dollars on the sidelines from the American people back in play. Curtail the spending. I don't need to spend it all at all. I would just cut those taxes. Be honest with you, and then what I would do is I would begin to recruit external companies that's not in the U.S. international companies to begin to continue to invest in the U.S. I'm bringing dollars in. I'm taking assets and bringing asset money in. All we've been doing is sending money out the whole time. Therefore, printing more money. And I would say, Congress, we got to stop printing so much money. Stop it. Stop it. We got to stop in some fashion. Now, I'm going to say this right now, Cliff. That won't solve the problem. That'll just slow it down.
Okay.
It would just slow it down. I don't think right now, Cliff, you can solve the problem. We're too far in. We're too far in.
Wow. Yeah, I mean it's bad. It's because the problem is that you're growing at such a pace that the revenue is nowhere close to the debt, and then the interest payments are stacking up. So it almost seems as though we're selling these bonds on the market. So that's where the debt is to.
Correct.
It's people who bought the bonds.
Who bought the bonds? We did.
Yeah, but initially it's bought by the Fed, who creates the fake money. Go, here you go.
Correct.
And they turn around and sell those bonds.
Correct.
But why are you selling? Why? Okay, the Fed has no money.
No money.
So if I went to you, Dale, and I said, I don't really have none. I'm going to write down this IOU on a piece of paper. Hey, Dale.
Sure.
I owe you $100.
Okay.
Cool. In this currency. You go and you can spend that IOU.
Correct.
Cool. So to you, you're going, okay, I owe Cliff $100. I went and spent that money. If you couldn't pay, why would you have to pay me when I made up the money to begin with?
Good question.
Why would you? I'd be like, well, hold up. Did you take a loss? If you made the money up, why would the Fed take a loss? They can't take a loss. They didn't have nothing to lose.
Nothing to lose at all.
So why are we? It makes no sense. It seems like you should just inflate, and you can track the inflation, but you don't call it debt. You call it inflation, and that way you don't sell it, and that way you don't have to pay $800 billion in interest because you're selling a made-up thing. Why are we selling something made up and then paying interest on the made-up thing? That makes no sense.
Because the government has successfully disguised this as a business, and it's not.
It's a game from the Fed. The Fed gets to make up money and then make interest on money made up. And it's a private institution that gets to do that. Name me, how in the world can a private institution create currency for a country and then get interest on the money they made up?
Because they have They have deceived the people to mask this whole thing as the government's business, when all it is just a way for them to control and manipulate the masses and grow in wealth.
I think you would have to be, because why? I'm just throwing out something crazy, right? I'm throwing out, this is just an idea. Why couldn't somebody just sue the Fed for fraud?
Because of the Federal Reserve Act that's passed 1913. Cannot.
So basically, they are committing fraud legally.
Exactly. Yes.
That's what it is.
Yep. Yes, sir. Yes, sir. It's when they actually print money, right? What they do is they are legally committing fraud.
It's so I see what's going on. The Fed creates the money.
Mm-hmm.
They give it to the government. Okay, y'all can
Mm-hmm.
spend. You owe me
Mm-hmm.
that money though I made up. And in return, I get an interest payment from the government.
Mm-hmm.
I
Mm-hmm.
take that interest payment and I
Mm-hmm.
sell that,
Mm-hmm.
and I get revenue
Yes.
in order to do that. And any ones I hold myself,
Yeah.
but I'm really selling to the banks.
Correct.
So vis-a-vis, you know what I'm saying? You go step one, step two.
Yeah.
The government, who do we owe? If you look at it that way, who does the government owe money to? The banks. We are in debt. The United States is in debt to our own banking system.
They actually own the Federal Reserve.
They own the Federal Reserve.
Yes.
So all of our debt, the U.S. debt, is borrowing from our own banking system, and
Correct.
the banking system is creating all the money.
Correct.
We're paying
That
interest to the banks for the right for them to print money. That's a good point right there.
man, that's a plan and a half, brother. A plan and a half, bro. And all they did was disguise this as a business, the government's business. So they use terms like debt ceiling. Debt is a term in business, right? Revenue, a term in business. Taxes, it's a term in business. That's all it is.
So
That's it.
so 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 basically, the banks are nationalized.
Oh, they've been nationalized for a long period of time. Oh, yes. But you don't know that.
Oh man, it's crazy. You're right. That's why Bitcoin is such a, because it takes away the ability for anybody to print, and the banks can't even do
Yes.
fractional reserve banking. They can't do that.
Mhm.
And
Mhm.
it creates a gold standard.
That is the reason why J.P. Morgan, Jamie Dimon, J.P. Morgan Chase, last year spoke bad of cryptocurrency, while at the exact same time buying it all.
Because they can buy it with fake money.
Fake money. That's why when people like Robert Kiyosaki, really Grant Cardone and Robert Kiyosaki, when they say cash is trash, they're saying it's worthless. I'm trying to get rid of this as fast as I can into an asset. That's why they say I love going into debt. Why? I'm playing the same game that the government is playing. It's a debt game. They disguised it as a business and says, "Hey, Cliff, LaDale, you guys have to do a business that makes money. Yeah, you want to make sure that you're profitable, which is great, but the government is never profitable. They're never profitable. Why? Because they're playing the debt game, and they disguised it as a business to sell to you."
Yeah. The business is creating something out of nothing and selling you that nothing for something.
Man, that's a hustle and a half, boy. A hustle and a half. You said it best, Cliff. Say it again for the folk back row. What's the business model? It's the business model, brother. There it is, brother. It's, man, we had planned on walking through appraisals, guys, but we went on a little test. We do that next week. We do that next week, man. It was, bro. This was very insightful. The guys got to pick into me and Cliff's mind concerning how we think of things about money and investing and government spending and things of that nature, guys. The president of El Salvador actually talked about this type of system. the president of El Salvador, talked about it at CPAC. Go online and look for it. He'll tell you. He'll tell you in 1 minute. Yes. So, guys, this is why we say cash should be attached to assets like real estate, because that right there, that shoulders you from any type of loss. Because when crap hits the fan, and it's about to hit the fan, guys, you have something tangible in place to leverage against, lean against. The government just has you. You are the security for the government. You are.
Yeah, no, Robert. That's why Robert Kiyosaki has that same philosophy: is I buy everything the government can't print.
Exactly.
If you can't
That's
make
it.
more of it, that's what I want.
I want that.
Yeah.
Yes. Well, man, Cliff, man, this was uninterrupted, guys. Uninterrupted, guys, man. Hey, man, before we leave, guys, hey, people all will have been asking us concerning about real estate training, guys. We got something for you guys to see, man. So you can see, so that you guys know that we do offer that as well, also. And in a second, we also talk about hunter appraisals as well. So here we go. Most individuals that I talk to today, they're really concerned about the economy, specifically the volatility of it. Now, the area of their concerns really centers around the variable of inflation. Inflation right now is really outpacing people's wages, number one. And number two, it's beginning to affect their 401k and IRAs because their retirement accounts are connected or intertwined with the stock market. Over the years, I've been fairly successful in real estate investing. Currently, I own about $35 million worth of real estate under management. And also my partner and I have been able to build our private equity and venture capital firm to about $1.2 billion worth of assets under management. Now, this success has taken place in up or down economies. Now, whenever there's volatility in the market, opportunities begin to show up. There are 3 investment strategies that, if implemented the correct way, any investor can go from 0 to 6 figures in the next 6 to 12 months. Click on the link below or swipe up and let's talk through these strategies. Hey guys, man, if you guys are wanting any type of real estate training, guys, man, hey, the Cash Flow Club is what it is, man. We get asked all the time concerning, hey, can you guys teach us how to invest in real estate, guys? And we can, guys, but at the exact same time, we want to make sure that we give you guys what you actually need. So this is the Cash Flow Club. You're welcome to click on the link below, or also scan the QR code. It takes you right to it, guys. $99 when you get training on demand. And also, man, from my partner Cliff, man, we get all the time asking about, can Cliff help out when it comes to appraisals, guys? Well, good news for you. He can. And you go to hunterappraisal.com, guys. You can schedule time to talk with him, so to speak. And people have been going to him left and right concerning the council. Man, Cliff, tell them about what's going on here, brother. Talk to people.
Yeah, so at Hunter Appraisals, where we do appraisals in the DFW area, come out to your house, do remote appraisals. We do kind of a little bit of everything, even consultation. So basically, we're just being able to handle any real estate needs in the DFW area. We already had a couple of people who responded from this video that we've been doing every week from the podcast. I already had several people already ordering appraisals, so we're starting to do a little bit more. You're probably going to see us start marketing a little bit more as well. So you're going to see us out there in the marketplace. But yeah, just go to the website. If you need anything, you can fill out the online form or just ask a question, man. And I'll respond to you pretty quick.
Sounds good. Again, guys, go to hunterappraisal.com. You guys understand how vital and good it is for you to actually have somebody that's a licensed appraiser at your disposal. Cliff, do we ever have, we actually buying the real estate, man, do we actually have access to appraisers appraising our properties?
Oh yeah. The appraisers are the ones who actually are the ones working with the banks.
Do we have access to those appraisers?
Yes,
we do. So my question is, can we have access to them like we have access to you?
Oh, no.
No, you see what I'm saying? So actually having someone that's a licensed appraiser, not only in Texas, but in others, they can do it in other states as well also, to give you wise counsel, guys, that is paramount. That is wonderful, guys, because that's not normal for any investor at all.
Yeah, I get questions all the time. People call me up, asking questions about a lot of different stuff. I had a conversation I was telling Dale earlier with a lawyer, going over all the situation that you can go through that you need an appraiser for. So that's a lot of different scenarios. Plus, whenever we're doing investment deals, I get an understanding for what the appraiser is going to be looking at, how they're going to be qualifying and quantifying the value that they're coming to, and
Correct.
so that gives a little bit of an insight.
It does, guys. So again, guys, hunterappraisal.com. And also, guys, you can also, when it comes to the Catholic Club, is right there as well. Also, guys, scan on the QR code, either right here or up here in the top left-hand side as well. Also, guys, but again, guys, I can tell you now, Hunter Appraisals, guys, it's legit. So guys, man, that's all we have for today. It's been an hour and 11 minutes, guys. We went in the bag today, man. We went in the bag. So next week, guys, we'll talk about the appraisals and how vitally important. We'll walk through an actual appraisal, guys. That, to be honest with you, that Cliff actually got on the phone line with the appraiser and had to counsel the appraiser on how to do it the right way. And it's important for you to have that information so you can know exactly, if you get into the situation, you can say, hey, what about X and Y and Z? And Cliff it was a masterclass of what he actually did. And it was all in good respect. It was in good respect. Cliff didn't get mad at him at all, period. It was more of, I was just like, this is just, if I could record it, guys, I would have recorded it and let you guys hear it. It was that good. Cliff, you agree, man?
Man, it was just an appraiser. I think he was in a rush. He didn't look at the details. He just didn't follow the process at the end of the day, and it wasn't done to the level that it should have. And it was easy to point out because he just didn't do his job.
That's it, guys. And also, guys, people been asking about about the merch. Brother got some merch, man. I don't have it on today, but hey, I got some merch, man. I got that bag University hoodie, baby. Click on right here, and also I got another right here. It says the bag. Yeah, I know I look better than you. It's okay. Don't get mad at me. Talk to Jesus about that thing. But you can look as good as I do sometimes with my merch, guys. But guys, man, that's all I have today. And also we have a T-shirt as well. Got the bag University. It's right there, man. But guys, man, that's all we have for today, man. Man, what's this? Okay, somebody just man, this is crazy, Cliff. Man, guys, we actually have new technology. I think someone actually scanned the QR code. Damn, it lets me know that somebody scanned it. Someone scanned the QR code. Yeah, they sure did. Man, that's off the chain, guys. Well, man, thank y'all for the support. Again, guys, here is the Cash Flow Club bundle, guys. $99, man. It is what it is. It's right there, guys. You get me and Cliff on the man training, or you're welcome to go below and scan on the QR and click on the link below. But guys, that's all I have for today, man. Cliff, want to say anything, man, before we get up, dope?
Man, same thing every week, man. You one deal away from changing your situation. Just, man, stay with it, man. Hit us up, and you're gonna get there eventually.
It is, man. But you know how we said every time, baby, before you leave and while you can, you see that thing, baby. Take that damn picture and go Mavs and give it to your mama them. And holla at your partner. All right, guys. See y'all next week. Peace.
God give thanks. Bless God, give thanks. Bless God, give thanks.